Hi everybody, Alex Deploy here from Expert Forex, and in this video we're going to talk about how to use the pruning function that has been recently introduced into our most recent EAs. So what we're going to have a look at in the video is reasons why not to use the pruning function, manual ways of utilizing the pruning function, and then automated ways of using the pruning function. Now, the pruning function has already been discussed in detail in two previous videos. Here's the one that was literally made yesterday and has a lot of trading examples. And then here's a further one with a lot of trading examples that you can have a look at. So I'm going to assume that you've already watched these videos, and I'm just going to give you a summary of what was shown in these videos. But from questions that have been asked in our emails and discussed in the forum, I can see that we need to do some clarification on the functionality of pruning. And the first thing is, pruning is a survival tool and not a trading strategy. When the pruning came out, a lot of people go and try and optimize it and treat it like a trading strategy. It is not, it is a survival tool. So like a fire hose, pruning has been designed not to be used. And you only use it when there's a fire, when you're in serious trouble. It can also be used to prevent serious trouble. So in today's video, we're going to be talking about two main pruning methods, the balanced pruning method. And how the balanced pruning method works is that when the price retraces to a previous grid level, then there's a positive cash in over there. And what the balanced technique uses is it then looks for a matching negative result that will result in a small profit or a very small loss. So in this example, it took that positive from there and then it found another negative, and the two of them made actually a nice profit. So the balance method tries to make a little profit in cashing in two of the techniques, by cashing in two of the trades. And by cashing in two of the trades, you are reducing the number of open trades that there are and the risk of incurring more drawdown should the trend continue. But in the process, as shown here, there was the break-even point for the conventional profit retrieval process. And by cashing in over there, the break-even point was moved even lower. So that's one of the disadvantages of pruning. So then we have a second pruning method, which is the first and last pruning method. And using that method, and this is almost exactly the same example, there was the positive cash in of the last trade. And then what it will do is it will just blindly go and look for the first trade that was made in this series of open trades, and it will close that trade. And in this particular case, as you can see, it closed it at a small negative. It had the same disadvantage here, that the break-even point, according to the profit retrieval process, was moved further down as a result of that cash-in, but the cash-in resulted in the pruning of two open trades. The advantage of this method is it pruned the oldest trade, the one that can actually cause the most damage in the long run. Now, one thing you have to believe, the profit retrieval process on its own is better. So what we want to do is we want to use the profit retrieval process on its own without enlisting the help of pruning. Now, that's not always possible. And as I say, that is why pruning is like a fire hose. It's there, but you don't want to use it. So let's look at a live situation. This is in fact a chart taken from today's trading, and we can see here, this is the New Zealand yen, and you can see this amazing trend that's happened with the New Zealand yen. It has trended over 400 pips with very little drawdown. So let's just go and have a look at, should we have used pruning, how many times pruning would have been active. And for pruning to be active, it has to travel from a grid level at the top to a previous grid level. That's the price movement that is required. So let's have a look here. So the entry here into this series of open trades, and I think there are, let's just see, 6, 9, 12, 15, 16 open trades in this particular run that has happened. And the first one over here happened over here, and you can see the price went up, then went to the second level, the third level, didn't retrace, no retracement there, no retracement there, and then there looks like a retracement down to the next level. So there was one retracement where pruning might have enabled us to cash in on that leg and then maybe cash in on this last trade. So there we have one cash in, then we go up, there's no retracements here, no retracement, no retracement. And then here's a retracement, it's touched the top, it touched the bottom, second retracement. Again, if we had pruning of the first and last transactions, then we would have pruned another one of these last trades. So we over there, there's no retracement, there's no, there, missed there, no retracement, no retracement, then here it goes, and there's a retracement, so a third retracement, we could have cashed that leg in and got rid of another leg here at the bottom. Now also bear in mind, this cashed in leg gets replaced when it hits that grid level again. So we actually benefit from those cash ins too, in that they might repeat over and over again, which is what happened here. So it opened another one, went back, and then cashed in when it hit this grid level again. So again, we got rid of another grid level at the bottom. So up we go. There's no retracements, no retracement, no retracements here because it never went to the top. No retracement, then it went there, touched that top one and came back. So there's one more pruning that could have happened. Another one of these legs could have been eliminated and a positive cash in would have happened here. Then there was another prune because it went from one grid level to another. So another prune here, another positive cash in, another leg eliminated here. And then it went up and opened another trade, But then it came down and closed that other trade at the top there and closed that on a pruning basis. And again, another leg was pruned here. So instead of having an open set of trades of 400 pips, we could have been maybe 240 pips. So that's the advantage of pruning. It can actually reduce your open trades to a level that things become more manageable, because at that point you need a 400 pip retracement to get back to this level here. So here are the open trades that have happened up to now. Remember, the pruning hasn't been in place, so here you can see that the worst transaction there was 410 open pips. So that's most probably the first one that would be eliminated. Then the second one will be eliminated, and because we go first, the first and the last, there will be negative results coming through there. But here's the first thing that you need to look at. If you're using the first and last trade method, you've got to look at what your current close profits are. So here we have close profits of almost $16,000. So we can well afford closing a 400 pip deal or a 380 pip deal. So that's one of the key considerations to bear in mind when choosing which method of closing you want to do. Do you want to do the first and last, or do you want to use the balanced method? Now, the balanced method, if we went through here, would not have been that effective in that it didn't eliminate these old trades. They would still be in place, and the balanced method would have only had a few gaps in here, but these are the ones that actually cause the problem. So you need to look at whether you've got enough close profit. Then you say, okay, yes, I have enough profit, therefore I can afford to use the first and last method. Now, so I'm hinting here at manually activating the pruning. So most probably here for the first couple of open trades, you wouldn't even think of using pruning at all, only when you start getting into trouble. And that's when you activate the pruning and let it run. So pruning can also be a manual tool. And also because you have to decide whether to use first and last, or whether you want to use balanced. So earlier in the game here, balanced is better than first and last because you don't want to incur a loss. So balanced allows you to close 2 trades without making a loss. The first and last trade method almost guarantees a loss, but that's not too serious if you have ample closed profit. So the older the trend becomes, the more you should be using first and last, and the earlier in the trend you should be using the balanced method. So I'm just throwing out ideas at the moment to give you a feeling of pruning being a tool rather than a strategy. So the reason why we'll be using pruning in this particular case is because we're in trouble. The market is trending tremendously strong, in a very strong way, and we want to eliminate these first trades, because who knows when the price will ever come down 400 pips to close those trades. It doesn't have to, in fact. What happens is you see this red line, that is the profit retrieval exit line. So if the price comes here, you will exit at a profit. So the price does not have to go back to 400 pips. It only has to go back, and just by looking at the with my eye, it only looks like it needs to go back about 180 or 170 pips to come out even. And that is why we also say that the profit retrieval process is more efficient if you have the patience to wait for that price to come down that 170 pips. And Mr. Fibonacci tells us that sooner or later in there will be a retracement of certain percentages, and we just have to be patient for that. So here's an example of a trend that's happened where the trader might not have done anything. In fact, not even generated a setting at that time. And then when there was maybe 6 or 7 open trades, I better activate pruning. Then they activate that setting in the settings, and they decide whether to do balanced or first and last. And then as it goes along, first and last would be the setting of choice. So it becomes a manually managed method of reducing risk. So factors that you need to take into account when deciding what method of pruning you want to use is the age of the account. And I've already mentioned, the younger the account, the more you need to use the balanced approach. The older the account, the more you need to use the first and last. Then, as you've seen already with this example, you need to take the profits that have been made into account too. So in this particular case, there was ample profits to absorb the losses from the first and last cash ins. If the account is very young, the profits might not be that high, and then you might opt for a balanced approach, because a balanced approach means you do not make a loss. Then you need to look at the age and size of the trend. Now, in our example there, the trend was 480 pips. It's an long trend. It's been going for about 3 weeks, and you need to take that into account. What is the possibility of the price retracing enough to hit the profit retrieval target? So what you would do is you'd use a combination of the two. You would prune and prune and prune until the profit retrieval process activates again and cashes in all those open trades on a positive basis. So the profit retrieval process is the strategy, and pruning is a disaster recovery tool. Very important point that needs to be appreciated about pruning. It does not make you more money. It just protects you should the trend go further and further. Okay, so how do we avoid using the pruning function? We don't want to use that fire hose. We want to just trade normally. First thing is, use gap sizing appropriate to the currencies traded. So if you're trading the pound yen, which is probably the most volatile currency, you would use big gap sizes like 50 maybe, or even 60. So you use big gap sizes for highly volatile currencies and smaller gap sizes for lower volatility currencies. So that's very important. That's number 1 point. In this particular trend that we looked at earlier, the appropriate gap size most probably was in the region of 45 pips. And should the trader have used 45 pips right in the beginning, there wouldn't have been 16 open trades. There would most probably have been 9 or so. So gap sizing, very important. Then lot sizing and account sizing. So lot sizing is your next important point. Always start with very conservative lot sizing, very low lot sizing, because they will, as the trades open more trades, the lot sizing just accumulates and accumulates and accumulates. You want to start with a small one so that the accumulation is small. So conservative lot sizing would prevent you from ever having to use pruning and gap sizing. Then lot size multiplying and gap size multiplying plays quite a nice role. Gap sizes, you want your gap sizes to grow quite big so that you have fewer grid levels. And lot sizing, you want to keep conservative because you don't want that to grow too quickly so that your problem becomes bigger and bigger as the lot sizing increases. So you need to balance those strategies very carefully. But that is also a way of, if you use those creatively, you don't need to use pruning. Then the next one is limit the number of currencies that you trade. And again, we have a setting there that allows you to only trade one currency once. So in other words, once a pair of, let's say that uses the yen is opened, the yen will not be opened again. So that's a way of controlling the number of currencies that you open, and you can also limit the number of pairs that you trade. You can trade 2 pairs or 3 pairs. That's much more conservative, and it will save your account from going into a big drawdown. And then the other one is don't be greedy. So go for the most conservative settings, use the biggest account that you can get, and you will sleep quite nicely. Again, I must stress, try not to use pruning if you possibly can. So why have we introduced pruning in the first place? Firstly, it is a tool to be used when you're in trouble. Also, it is a tool if you fear the market. If you fear a runaway trend, start with pruning right in the beginning. Start pruning after your 3rd or 4th open trade. Don't play around if you're a fearful trader. Use pruning if you don't have confidence in the trading strategy. Again, that will make sure that you have a better chance of closing trades in a particular trend when there's the slightest retracement. Use pruning if you started using aggressive settings. Sometimes you start out and then only the occasion arises for pruning. That's when you use it. You use it. If you've made a mistake, if your gap sizing is too big or your lot sizing is too big, then you're going to need pruning to get you out of trouble. And a lot of traders would activate pruning just to get a warm feeling that they are protected. Then just a reminder that you can purchase the RSI at 80% off if you buy it in a bundle, and if you already own any of these EAs in this bundle, you can buy the rest of them for 80% off. Now, I hope I've given you a better feel of what the role of pruning is in trading. It's not a strategy, it is a method to get out of trouble. As simple as that, and please treat it as that. The idea is never to use pruning, but if you do use pruning, use the appropriate one, either the balance earlier along or the first and last method later. So from me, Alex Eploy, cheerio.